What are the fixed assets and current assets? Fixed assets and current assets are two different types of assets that a company may have on its balance sheet. Fixed assets, also known as property, plant, and equipment, are long-term assets that a company uses to generate revenue and typically have a useful life of more than 1 year. Examples of fixed assets include buildings, land, machinery, and equipment. Fixed assets are not easily converted into cash and are expected to provide a company with long-term benefits. Current assets, on the other hand, are short-term assets that a company can convert into cash within a year or less. Examples of current assets include cash, accounts receivable, money owed to the company by customers, inventory, goods that the company intends to sell, and prepaid expenses that have been paid in advance but have not yet been incurred. Current assets are typically more liquid than fixed assets and are expected to provide a company with short-term benefits. The distinction between fixed assets and current assets is important because it affects how these assets are reported on a company's financial statements and how they are used to calculate financial ratios, such as the current ratio and the return on assets ROA. Here are some examples of fixed assets and current assets. Fixed assets like buildings and land, machinery and equipment, vehicles and transportation equipment, office furniture and fixtures, computer hardware and software. Current assets like cash and cash equivalents, accounts receivable, inventory, prepaid expenses, marketable securities, short-term investments. It's worth noting that the distinction between fixed assets and current assets can sometimes be blurry. For example, a company may classify a piece of equipment as a fixed asset if it expects to use it for several years, but it may classify a similar piece of equipment as a current asset if it plans to sell it within the next year. Similarly, some investments that are classified as current assets may be held by a company for longer than a year if they are expected to be sold in the near future.